Hi everyone, I'm Emily Carter. Today is September 30th, 2025. In this video, I'm breaking down Axcelis Technologies, ticker ACLS, what the company actually does, how the numbers look, what just changed, the key risks, and what I'm watching next. Axcelis builds ion implantation tools, critical machines used in chip manufacturing. Their systems sit inside fabs and literally implant dopants into wafers to set electrical properties. The whole product family is built on the Purion platform, which targets different current and energy ranges for high current, medium current, and high energy use cases. Axcelis's biggest edge right now is in power semiconductors, especially silicon carbide (SiC) devices used in EVs, charging, and industrial power. The company's new Purion Power Series Plus specifically aims to improve device performance and fab productivity for next-gen power architectures, including superjunction across 150mm to 300mm in both silicon and SiC. Let's talk results. In Q2 2025, Axcelis posted $194.5 million in revenue, 45% non-GAAP gross margin, 17.7% non-GAAP operating margin, and $1.13 non-GAAP EPS. Management guided about $200 million for Q3 revenue. The stock actually jumped after the beat. Earlier in September, Axcelis launched Purion Power Series Plus, extending coverage across the full ion implant market for power devices and offering upgrade paths for existing tools. That's important. In capital equipment, upgradeability often means faster adoption and a smoother revenue mix between new tools and field upgrades. Ion implant is a specialized step with high technical barriers: beam current, energy range, contamination control, thermal budgets. Axcelis focuses only on implant, unlike some broader competitors, and that focus has helped it capture meaningful share in SiC implant, an area likely to grow through the decade. Despite the product momentum, sentiment has swung with semi-equipment cycles. You'll see that in relative strength reads and in how investors react to quarterly guides. Recent RS discussions reflect improving price action, but also remind us that EPS and sales had been lapping tough comps earlier in the year. Here's my shortlist. 1. SiC capacity adds at major power semi customers. Tool order cadence follows that. 2. Purion Power Series Plus uptake, new tools and upgrades. 3. Margins. Can gross margin hold mid-40s as mix shifts? 4. Order visibility into 2026 builds, management color in calls and decks. 5. Any signs that Axcelis is broadening from SiC into adjacent power nodes with meaningful share gains. Third-party takes suggest a healthy, multi-year ion implant TAM as electrification ramps. One coverage note even frames implant demand at 1,200 plus tools and roughly 6B capex potential by 2030, with Axcelis holding or even growing share in SiC. Of course, that's a forecast, not a guarantee. Cycle risk is real. If SiC EV adoption slows or capex pauses, orders can slip. Competitive responses from larger peers can pressure pricing. And like any equipment maker, Axcelis is exposed to export controls, supply chain timing, and fab project delays. Near term, I'm watching whether Q3 lands around that $200 million mark and how the backlog evolves into year-end. Longer term, the Power Series Plus launch plus the company's SiC position keep Axcelis on my radar as a focused, high-moat niche player in a structurally growing corner of semis. That's the Axcelis story for today. Tools that matter, a SiC power tailwind, new platform upgrades, and a watch list of catalysts into 2026. If you found this helpful, hit like, subscribe, and tell me in the comments, is ACLS a niche winner for the next EV cycle or just another cyclical trade? I'm Emily Carter, and I'll see you in the next one.